Welcome to the Deep Dive. We're the place that cuts through the noise of earnings calls to give you the insights that, well, actually matter.
That's right. And today, we're tackling Hudbay Minerals, ticker HBM. This is their Q2 2025 earnings call from August 13th.
And our job here is simple. Break down the key numbers, the big announcements, the operational stuff so you get the full picture of what's really driving Hudbay right now.
And it was quite the quarter for them. Calling it robust honestly feels like selling it short. They didn't just meet expectations. They pretty significantly beat them.
Okay, let's get into those numbers then, because they do tell quite a story. GAAP EPS came in at $0.30. But the adjusted figure, that really stood out to me. What was that?
Yeah, the non-GAAP, the adjusted EPS, landed at $0.19. Now, compare that to the consensus estimate, which was sitting around $0.11.
Wow, so that's over 70% beat?
Exactly, a 72.7% beat. I mean, that really points to strong operational control hitting the bottom line.
And it wasn't just earnings, right? The top line looks strong too.
Oh, definitely. Revenue hit $536.4 million. That beat consensus by over $41 million, about 8.3%, and it's up a healthy 26.1% compared to last year.
Strong growth there. What about cash generation, EBITDA, operating cash flow?
All looking very good. Adjusted EBITDA was $245.2 million. Cash from operations, $259.9 million. And importantly, free cash flow came in at $87.8 million.
That SCF number is key. And you can see it reflected on their balance sheet, can't you? It looks much healthier.
Healthier is an understatement. It's probably the strongest it's been in, well, over a decade. They got net debt down to $434.1 million.
It brings that leverage ratio
right down. Net debt to adjusted EBITDA is now just 0.4x. Really stellar. And they've got plenty of breathing room, too, about $1.05 billion in liquidity, including over $625 million in cash.
Wow, okay. The fortress balance sheet, almost. And on the cost side, I saw one number that seemed almost too good to be true.
Yeah, you're probably thinking about the consolidated cash cost, negative 2 cents per pound of copper.
Negative? How does that even work?
Well, it means once you factor in the value of their byproducts, things like gold and silver, they're effectively getting paid to produce that copper. It's an incredible position to be in. It gives them massive margin protection.
And the all-in sustaining costs?
Still very competitive, $2.03 per pound of copper. So overall, really strong cost performance.
So numbers look great, costs are down. How did the market take all this news on the day?
Very, very well. The stock jumped double digits intraday right after the call. The NYSE listing finished the day up nearly 15%, something like 14.9% on pretty heavy volume too.
Okay, so a clear thumbs up from investors. That makes sense given the results and I guess the strategic news we'll get into.
Exactly. It wasn't just the numbers, it was the whole package, especially the de-risking of Copper World and that improved cost outlook.
Right, let's dive deeper then. Management kept hitting those themes, industry-leading cost margins, strong free cash flow, the strengthened balance sheet. It feels like more than just one good quarter.
Absolutely. This is about sustained discipline. That free cash flow, for instance, this is the 8th quarter in a row they've generated meaningful FCF, and they're putting it to good use.
Like paying down debt.
Precisely. They bought back and retired $50 million of their senior unsecured notes during Q2. Smart move, getting them back at a discount.
And that's part of a bigger deleveraging push, isn't it?
It is. Since the start of 2024, they've paid down debt and reduced gold prepayment liabilities by about $295 million total. That included fully paying off that gold prepaid facility just this month in August. It gives them so much more financial flexibility.
And they seem confident looking ahead. Guidance was reaffirmed.
Yeah, full-year production targets held steady for all metals. But the really impressive part was the update to the cost guidance.
Yeah, okay. What changed there?
They significantly improved the full-year consolidated copper cash cost guidance. They tightened the range down to $0.65 to 85 cents per pound. It was $0.80 to $1 before.
So lower costs expected for the rest of the year. That suggests these improvements are durable.
Exactly. It signals that the operational gains they've made are really sticking.
And speaking of operations, they certainly showed resilience, didn't they? Especially considering some of the headwinds. Let's talk Manitoba first.
Yeah, Manitoba faced those awful wildfires back in May and June. Really unprecedented stuff. It did cause some temporary shutdowns, lower gold production for the quarter.
Any damage to their assets?
Thankfully, no. No damage to infrastructure. And Hudbay really stepped up, committing over CAD $2 million to support the communities and their employees affected by the fires.
Good to hear. And operations are back on track now.
Yep, fully resumed, and they're confident they'll hit their 2025 production guidance for Manitoba. They also mentioned the Lore mine prioritizing gold zones for the New Britannia mill, and that mill actually hit record monthly production back in April. So resilience is the word.
Okay, down to Peru then. Constancia. Any issues there?
There were some protest-related disruptions impacting transportation, moving concentrate out and supplies in, but crucially, the Constancia mill kept running throughout.
And the blockades are cleared now.
Yes, roads have reopened so they can clear inventory and restock. They did mention a slight shift in the mine sequence, pushing the final depletion of the Pampacancha pit into Q1 2026. But again, full-year guidance for Peru is still on track.
Right. And then there's Copper Mountain in BC. That's been an optimization focus for them. How's that going?
Making good headway. The big project there is converting the SAG mill to a ball mill. Phase 1 of that wrapped up successfully in July, on time and on budget, which is always good to see.
What's the goal with that conversion?
To boost capacity. The next phase is set for Q4 this year, and the target is to get the plant up to a nominal capacity of 50,000 tons per day in 2026. They also hit a nice milestone on the Ingabel Growth Project permit application. It's now officially in review.
Okay, operational resilience seems clear. But the really big news, the transformative piece, has to be the Copper World deal, right?
Oh, absolutely. Game changer territory. They announced a joint venture with Mitsubishi Corporation.
A major partner. What are the terms?
Mitsubishi is taking a 30% stake in the Copper World project for a total investment of $600 million.
$600 million. How does that break down for Hudbay financially?
It's structured really well for Hudbay. They get $420 million in cash from Mitsubishi when the deal closes. Then another $180 million comes within 18 months after that.
And the impact on Hudbay's funding needs for the project.
This is the crucial part. It massively de-risks it. Hudbay's estimated remaining capital contribution for Copper World drops to only about $200 million. And maybe even better, their first actual capital contribution is now deferred until 2028 at the earliest.
Wow. Okay. That frees up a lot of capital in the near term.
Yeah.
And having Mitsubishi involved must be a huge validation.
Huge. Mitsubishi isn't just anyone. They're a global player in minerals trading and investment, already involved in other top-tier copper mines. Their participation basically screams, this project has value. The CEO even mentioned his own positive history working with Mitsubishi on the Antamina Mine JV.
And there was more financial tweaking, too, with the Wheaton precious metal stream.
That's right. They amended that deal. It adds a potential extra payment of up to $70 million tied to future mill expansion milestones. And importantly, it changes the ongoing payments for gold and silver. Instead of a fixed price, Hudbay now gets 15% of the spot price.
So more upside exposure to gold and silver prices.
Exactly. Something they didn't really have before under that stream.
So putting it all together, the JV, the stream amendment, plus the permitting they already secured and the strong balance sheet.
Yeah.
Does this mean their 3P plan is basically done?
Essentially, yes. The 3 Ps were permitting, partner, and prudent financing. They've got phase 1 permitted, they've secured a world-class partner in Mitsubishi, and this JV structure provides incredibly prudent financing. It clears the runway for Copper World.
So what's next for the project timeline?
The big one is the definitive feasibility study, the DFS. That's expected by mid-2026. Then comes the final investment decision, likely later in 2026.
And this whole deal plays into that Made in America copper narrative too, I imagine.
Very strongly. Hudbay is really emphasizing that. Copper World is set to be a major U.S. copper source, aligning with critical minerals policy, national security, all that stuff.
What kind of impact are they talking about domestically?
Big numbers. A $1.5 billion investment in the U.S. supply chain. Over 1,000 construction jobs, likely union labor involved, over $850 million in U.S. taxes over the mine life, plus hundreds of direct jobs and thousands more indirectly in Arizona. It's a compelling story for domestic investment.
Okay, that covers the main announcements. Let's shift to the Q&A. Analysts always dig into the details. What came up there? Offtake rights, for instance.
Right. Predictably, Mitsubishi gets 30% offtake rights, matching their stake. On the Albion process, that concentrate leach facility, management said yes, it'll be studied in the DFS.
But no plans to accelerate it right now.
No, they want to avoid adding upfront capex and risk. Keep phase 1 straightforward first. Sensible approach.
What about future phases? Rosemont, Mason. Yeah. Any updates on permitting beyond phase 1?
They were clear. The focus right now is 100% on Copper World phase 1, which is permitted and on private land. No active talks with the administration about phase 2 or Mason at the moment.
But they see the environment as generally positive.
Yeah, they describe the current federal mood as highly constructive for critical minerals projects like these. So the door seems open for future discussions down the line.
Analysts always ask about costs. Any concerns about capex inflation for Copper World since the last study?
Management acknowledged, yeah, there's likely been some inflation since the 2023 PFS, just the reality of the world. But they expect higher copper prices and, critically, that huge chunk of funding from Mitsubishi to more than offset it. No major changes to the project scope itself are planned for the DFS.
And the Mitsubishi deal itself, any regulatory hurdles expected in the U.S.?
Hudbay doesn't foresee any issues. They emphasized it's a minority stake, and the whole point is to enable made-in-America copper and create U.S. jobs. They do plan to file a brief with regulators just to be transparent, even though it might not be strictly required.
Okay, and one really interesting point was the funding order, the waterfall for Copper World. Can you explain that and why it matters for Hudbay's returns?
Yeah, this is key to understanding the value creation here. The money comes in this order. First, Mitsubishi's JV cash. Then, a portion of the Wheaton stream proceeds. After that, project financing. And only then do Hudbay and Mitsubishi contribute their 70-30 share of the remaining equity.
So Hudbay's equity comes in last.
Exactly. And that's why Hudbay's own levered internal rate of return, the IRR, on their investment skyrockets to over 90%. The project-level IRR is around 20%, which is solid. But because Hudbay's cash contribution is smaller and deferred way out to 2028, their specific return gets massively amplified. It's smart financial engineering.
90% IRR. That certainly grabs your attention. Lastly, any quick updates on exploration? Manitoba, Peru.
Manitoba's drilling was paused by the fires, but has started back up in places like the Talbot deposit. In Peru, exploration is currently on hold. They're waiting for the government to finish a consulta previa process. It's a required consultation process with the local indigenous communities before exploration or development can proceed. Pretty standard procedure in Peru, but it means things are paused there for now.
Got it. Okay, stepping back to the big picture, the investor view. Sentiment clearly bullish after this call.
Undeniably, you've got the big earnings beat, the much better cost outlook, and crucially, that Copper World financing package that just removes so much risk.
It feels like a real turning point for the company story.
I think so. You can really see the shift. They've gone from a phase focused on fixing the balance sheet to now being fully growth ready and getting validation from players like Mitsubishi and Wheaton. That adds a lot of credibility.
So looking ahead, what are the key catalysts for investors to watch?
Several things. Obviously, the closing of the Mitsubishi JV, they're targeting late 2025 or early 2026 for that. Then completing that Copper Mountain Mill conversion in Q4 this year.
And longer term, the Copper World milestones.
Right. The DFS completion by mid-2026 and the final investment decision that follows. Plus, you'll want to watch ongoing operational performance, any exploration news, and of course, the copper price itself.
Which has been pretty supportive lately.
Yeah, copper near $4.50, a tight supply picture, and that supportive U.S. policy environment all provide nice tailwinds.
And if Copper World does get built, what does that mean for Hudbay overall?
It transforms them. They expect annual copper production to jump by over 50% from where they are now. Over 70% of their revenue would come from copper. It really cements them as one of the major pure-play copper producers focused on the Americas.
Okay, fascinating stuff. Now let's transition to that part of the deep dive where we engage in a bit of intellectual sport. This is our not financial advice segment. Purely hypothetical, for fun, based on the call. Remember, this is just us thinking out loud. Definitely not recommendations.
Absolutely. Standard disclaimer applies. Do your own homework.
Okay, trade idea one. The pure play alpha play. Go long HBM, short a copper miner ETF like KaiPX. What's the thinking here?
Well, look at the performance. Over the past year, HBM is up, 35-36%? KaiPX has been pretty much flat, maybe low single digits.
So significant outperformance already.
Right. And the argument is that HBM isn't just riding the copper wave anymore. It's got its own distinct story now. The de-risk growth with Copper World, the super strong balance sheet, the proven operational chops with those negative cash costs.
While the ETF gets weighed down by maybe less efficient or higher cost producers.
Exactly. HBM has this specific made in America angle, top tier cost control, and clear catalysts. The market reacted so strongly to their news, suggesting it sees HBM differently now. So the bet is that this alpha generation, this outperformance relative to the sector, continues as Copper World moves forward.
Interesting. Okay, trade idea two. The deferred CapEx leveraged returns play. long HPM call spreads. Talk us through this one.
This is about leveraging that IRR story we discussed. You could look at call spreads, maybe targeting expiration dates after Q4 2025 when the Copper Mountain optimization should be contributing, or even out to mid-2026 as the DFS lands.
And the core logic is that boosted IRR.
Precisely. That jump from a 20% project IRR to a 90% plus Hudbay-specific IRR, all thanks to deferring their capital until 2028, is huge. It dramatically boosts the return on their equity while cutting near-term risk.
And the market might not fully appreciate that yet.
Potentially not the full free cash flow impact, especially with Copper Mountain improvements potentially boosting cash flow sooner. A call spread lets you participate in the upside if the stock keeps running on this story, but it caps your risk compared to just buying calls outright.
Got it. Two interesting, if speculative, ideas stemming from the call. So let's wrap this up.
Yeah, to summarize, Hudbay Minerals delivered a really impressive Q2, beat expectations, showed fantastic cost control, and most importantly, pulled off a truly transformative JV with Mitsubishi that de-risks their copper world growth engine.
And the market clearly loved it. It validates their strategy, positioning them as a growth-focused, low-cost copper producer ready to capitalize on strong copper fundamentals.
Their balance sheet is strong, capital allocation looks disciplined. Seems like they're set up well to drive value from here.
Okay. As always, remember investing carries risk. Those trade ideas were just thought experiments. Please, do your own research before making any investment decisions. Thanks for tuning into this deep dive on Hudbay's Q2.
And maybe the final thought for you, the listener, to consider is this. Just how much value can this strategic de-risking truly unlock from Copper World, and how fast will the market fully price in this transformation?
We welcome your thoughts. Join us next time for more deep dives into the earnings calls that move markets.